A lot of factors go into making a sale. Price is just one. Then there's finding just the right vehicle, colors, amenities, options, etc. that fits the consumer's wants and needs. However, more often than not, the single most important factor in making the sale is finding affordable financing for the customer. And that's where dealers play an ever-increasing and important role, but one that's under scrutiny by federal regulators. We have two reports on this important issue, beginning with NADA TV's Andy Field.
At the dawn of the automotive age, consumers had to pay cash for cars. Buy on credit? Unheard of. Bank loans? Rare. The auto financing industry had yet to be born, so buying a car was difficult for the common man. That changed dramatically in 1919. General Motors Acceptance Corporation was formed. It gave consumers access to credit that was convenient, affordable, and not available anywhere else. And that forever changed American society. Buying a car on credit increased mobility, providing the average family the freedom of movement to pursue the American dream wherever they chose. To this day, it's a highly competitive marketplace that increases consumer access to credit while reducing the cost. But all that is threatened by some who want more federal regulation. Not necessary, says NADA, and dealers across the country who made a strong case for the highly competitive dealer-assisted financing business model that helps consumers get the vehicles they need at the terms they can afford.
I think dealer-assisted financing is something that is extremely important.
Dealers across the country have better access to more financial institutions to give the customers more options for their financing of vehicles.
Pretty common occurrence that somebody come in from their credit union or their own bank with a rate in mind or been quoted a rate from that bank. And because we do volume with those banks, we're able to offer them a better rate at the same institution that they're trying to deal with.
They must be surprised.
Oh, they are. They are.
Dealers ultimately increase the access to credit while reducing the cost. I can assure you many times that I see people that go to their local bank and can't get financed and come to us, and we find a way to make that happen because of our relationships and our large array of sources to pull from.
We're very fortunate that we have a lot of very good relationships with financial institutions, the financial arms that we have with manufacturers, some of the community banks in the area because we've been here so long.
We shop 14 different lenders. We analyze what's available from the captive finance versus the regional and state banks, and we'll help you decide what's best for your family and your budget.
Dealer-assisted financing is an optional service that makes it one-stop shopping for the consumer, saving time and money.
Not only do we provide a service that's convenient for the customers, but I can tell you I've got literally hundreds of examples where we've been able to help customers who couldn't help themselves.
Let's go to Windsor Nissan in Windsor, New Jersey.
There was one particular customer who came in here, and through their credit union, they were going to get a 17 to 18% loan.
The dealership shopped several banks for the customer who drove home with a new car and a 7.6% rate.
Huge difference. And this customer was very happy, as we were, in being able to provide them that assistance.
Similar case. This time, we're at Advantage Chevrolet outside Chicago.
Just recently, we had a fella. He's an E6 Army veteran, served our country brilliantly in Iraq and Afghanistan, and he came to us to try to buy a used Chevrolet.
The consumer's credit was spotty, but his credit union made an offer.
His credit union said they would take a chance on him, but the rate that they gave him was 11.9%.
The dealership thought it could do better.
My finance manager sat down with him and really had a good personal interview with him. He just garnered a high level of respect for the guy, high character. So he called it in to one of our financial sources with whom we've had a fantastic relationship, explained the situation. The lender on the other side agreed with our finance guy.
The customer drove home with a 3.9% rate.
800 basis points less than he was able to get at his own financial institution. I mean, those are the kinds of things, Spiro, that go on with us every day.
It also happens every day at Stephen Wade's dealerships in St. George, Utah.
I can assure you I have highly trained people that work diligently every day to provide access to credit for customers that would have trouble getting credit.
Finance managers tell a customer's story far beyond the numbers.
Regularly that happens.
Michelle Prim runs 4 dealerships in Cuyahoga Falls, Ohio.
Nobody's going to fight harder for that customer to get approved for a car loan than the dealer that's selling the car. And we've got people that are trained and experienced in dealing with lenders, and they understand the collateral, they understand the car deal, the structure of the deal.
Our guys work hard, they work diligently, securing relationships with as many financial institutions as we can so that we give the consumer the option.
Total Amount Finance.
And often provides an option that was not available anywhere else.
A family came in, their credit score was a little lower, not terrible.
Westcott Buick GMC, Burlington, North Carolina.
We got them financed through a company out in California, and it fit their budget, and everything was fine, and they left very happy.
Credit they couldn't get anywhere around town.
No, they couldn't. They couldn't have done that at all.
Dealer-assisted financing does so much more for so many.
I want to say thank you very much.
Thank you so much.
It helps consumers get credit who can't get it anywhere else. Often provides lower rates than consumers are offered elsewhere. And many times it offers lower rates than customers can get from their own bank or credit union. And that's the message that NADA took to 3 Federal Trade Commission roundtables across the country last year, where dealer-assisted financing was issue number 1. NADA TV's John Spiropoulos has that part of the story.
Consumer groups at the FTC roundtables in Detroit, San Antonio, and Washington, D.C. accused dealers of all sorts of dirty tricks. NADA was ready for the onslaught.
We assembled a very strong team to put information before the Federal Trade Commission on each issue under consideration.
NADA's 2012 Vice Chairman David Westcott, a Buick GMC dealer from Burlington, North Carolina, laid out the facts on one panel. Mark Cross of Jordan Ford in San Antonio, Texas, spoke on another. Andy Koblenz, NADA's Vice President for Legal and Regulatory Affairs, vigorously rebutted consumer group allegations. So did Paul Mitri, NADA's Chief Regulatory Counsel for Financial Services, Privacy, and Tax. Dealers' interests were also represented by several other dealer associations, leaders in the automobile finance industry, and attorneys who specialize in dealership issues.
And during this process, we had an opportunity to present educational information to the Federal Trade Commission and to rebut a series of unfounded allegations against dealerships.
Some consumer panelists accused dealers of finance overcharges. Not so, countered NADA.
The first argument is, or the first allegation is that the entirety of dealer compensation is itself an overcharge, that the consumer can borrow at the buy rate, that's the rate that they are, quote, approved at, and that therefore anything that the dealer charges above that is gratuitous and it is an overcharge. Now that is simply not the case.
The consumer groups that make that allegation do not believe that the dealer plays any meaningful role in the process. And that is a fundamental misunderstanding of how financing is delivered to consumers in the marketplace.
Our fundamental point that we've made over and over is that the dealers add value to the financing system and that the payments that they receive is a compensation for the value that they bring to the table.
Dealers provide the retail distribution network for financing institutions.
Mrs. Grinstead, this is the agreed upon sales price. This first form, Ms. Grinstead, is the actual contract itself. Now this is the actual bill of sale.
Dealers assume a variety of costs in the financing process, including compliance with point-of-sale regulations.
We do that as a service, and banks encourage us to do that. They have, over the years, there's a reason that they want us to do it. It eliminates them having staff and personnel to do all the same things that we're doing to make sure that person gets financed properly.
Naturally, those costs that have been outsourced to the dealer need to be recouped by the dealership, and that is what dealer compensation provides.
Consumer groups also want to change how dealers are compensated.
Consumer groups would like to see it be a fixed fee, the way that they commonly say is present with a direct lending source such as a bank or a credit union. The discretionary nature of dealer participation they find to be problematic. Now, we completely disagree with the consumer groups on this point.
Some consumer groups feel discretionary pricing is unfair and that it may lead to discrimination against certain demographic groups, a practice which is already illegal. NADA always stresses the need for dealer credit operations to comply with the full range of requirements in the Equal Credit Opportunity Act. But NADA also recognizes that discretionary pricing, when properly carried out, can be very beneficial to consumers.
Discretionary pricing is what allows dealers every single day to put financing in the hands of the consumer that is less expensive than anything the consumer can get from an alternative financing source.
And thanks to the internet, consumers have myriad financing options.
So if they go to a bank or a credit union and they're offered 5.9%, and they go to the dealership and the dealership can offer them 4.9%, frequently, the reason the dealership can meet or substantially beat that offer is they have discretion to offer a lower cost of credit to the consumer.
Consumers benefit because dealers are not locked into a fixed amount of compensation.
And because they can go 50 basis points lower or 75 basis points lower, it's a win for the dealer because they earn the customer's business, and it's a win for the consumer because even though they may have checked 1 or 5 or 10 other finance sources, the dealership was able to beat each one of those sources. That certainly is in the consumer's interest, and it is discretion that allows the dealer to produce that benefit for the consumer.
Consumer groups are also urging the FTC to take action against abusive spot delivery tactics. Here's the allegation. The customer drives off with a vehicle pending approval of financing. The dealership knows in advance the deal won't be approved, but it makes delivery anyway, hoping to make a bigger profit when the customer is forced to return to the store to renegotiate the deal. This is not a widespread practice, but it's already illegal.
That behavior is fraudulent, and that behavior should be, there's already laws on the books and there should be enforcement of those laws, but that's also a very small slice of what happens in the marketplace. And the overwhelmingly large number of spot deliveries are ones where there is a good faith belief that the finance is going to be approved.
Enforce what's already in place. By doing that, you address the limited number of bad actors and you do not put more red tape against the large percentage of very good and honest actors.
Now that the roundtables have been completed, the FTC is considering whether additional regulations or enforcement are necessary. The standard for new action should be 1. That an unfair or deceptive practice is occurring in the marketplace, a practice that is prevalent, not anecdotal. 2. That the presence of this practice is supported by current and reliable data. And 3, that the practice is not already illegal.
We do not believe that the consumer groups came anywhere close to demonstrating a major issue where all 3 of those elements were met. And we are encouraged by the fact that the Federal Trade Commission, even though they have kept their full range of options open, has said they're going to carefully look at data and they're going to carefully look at the extent to which a problem is widespread in considering whether or not they need to develop a rule in this area.
Nevertheless, NADA is preparing for all possibilities. And should the FTC decide to propose more regulation, NADA will aggressively represent dealers' interests. John Spiropoulos, NADA TV.